It's a brand new week. Welcome to Business Incorporated. I am BC Adebayo. On today's show, Zimbabwe suspends trade on its stock exchange and mobile phone-based payments with immediate effect. Gunmen attack Pakistani stock exchange building in Karachi. Plus, African Union Commission Chair Musa Faki Mohammed says more than 90% of issues in the tripartite negotiations on the Nile Dam between Egypt and Ethiopia and Sudan have been resolved. Let's begin from the markets here in Africa, and it's not looking like a bright start to the week as most of the markets we track were in the red at intraday, except in South Africa, where the JSE index was 0.11% positive at about midday. But here in Nigeria, the All-Share index was down 0.16% as at midday. The EGX30 in Egypt was down close to 0.9%, while the Kenyan Burse ended Friday's session 0.14% south. And in the Middle East, it's a similar trend playing out at intraday, where major bourses fell in early trade. The Abu Dhabi index eased 0.68%, pulled down by a 1.3% fall in the country's largest lender, First Abu Dhabi Bank, and a 4.2% slide in Gulf pharmaceutical industries. In Dubai, the index edged down 0.21%, with Sharia-compliant lender Dubai Islamic Bank losing 0.5% and logistic firm RMX falling 1.1%. Qatar's index dropped 0.6%, with most of its constituents trading lower. Only the benchmark index of Saudi Arabia gained 0.08% at intraday, and that's despite the country reporting the highest number of new coronavirus infections in the 6 countries of the Gulf Cooperation Council today. And European stocks fluctuated on Monday morning as investors digested the rising coronavirus death toll. But let's find out what are the major headlines are driving the markets today with Chelsea Delany. Good afternoon, Chelsea. Today, Germany opened its first airport coronavirus testing center, and you were there earlier for the opening. What did you learn?
Well, as you said, this is the first of its kind in Germany, and it's also coming at a really crucial time for the country as Europe prepares to reopen its external borders. So we are gearing up for more international travel and just in general a lot more air traffic, and that of course brings a lot of concerns about how this will impact the spread of coronavirus both here and abroad. I think many people understand the concerns about potentially spreading the virus to loved ones if we travel, or about contracting it ourselves. So this is really an effort to bring a sense of security to these people who are traveling, and also allow for more international travel. What the clinic we saw today is like is it's a walk-in clinic, so you sort of just go in and you have a swab, and you can get your results, depending on how much you're willing to pay, between 2 hours and 8 hours. So this is one of the big downsides of this test, is that you do have to pay for it. It can cost 59 euros for a test that can take 6 to 8 hours. That is a significant amount of time to wait. Many people would have to get that test done the day before they fly, or you can get a fast-track test, which would take about 2 to 3 hours, which still would require you to get to the airport about 2 to 3 hours early, which most people probably don't want to be doing. So that's obviously one potential stumbling block for this effort, as well as the fact that it's voluntary at this point. So you don't have to take it; it's optional, and you would have to pay for it yourself. So this could really make it more difficult for people to take that test, and that could also mean that it's less likely to be as effective as people are hoping for it to be. So it is a big step for Germany, but it's not necessarily at this point going to be a widespread effort, or something that's being adopted in every airport by every traveler.
But Chelsea, this is coming as the EU prepares to reopen external borders this week. So are we likely to see travel start to pick up back?
It's going to pick back up, and it already has started to pick back up. We've seen numerous airlines beginning to add more flights into their routes. For now, it's mostly been within Europe. Some of these European airlines like EasyJet or Lufthansa are now running about 75% of those routes again. But now that external borders are set to reopen on July 1st, it is likely that we will see more international travel. But there obviously, it's not going to be 100% back to normal immediately. Even when these external borders reopen in a few days, it's only going to be to a select group of countries, excluding some really important countries like the United States that account for a large proportion of travel within the EU. So we will see a lot of countries not included in that reopening. And of course, as we've talked about, there is still going to be hesitance and anxiety about traveling for many, many people for the foreseeable future, even with things like the testing center. Many people likely won't feel comfortable traveling until there's a vaccine, which could take many, many more months. So for now, we are seeing a slow ramp up in travel, but it's still likely to take many months or potentially years to get travel back to where it was before.
Now, let's talk about stocks now. Of course, they're under pressure as coronavirus cases continue to rise. But what's the outlook from Frankfurt?
Traders here are certainly watching these numbers very, very closely. Here in Germany, there has been a bit of an uptick in cases in the past few weeks. There were a couple outbreaks, especially large ones stemming from a slaughterhouse in the northwest of Germany. And that obviously created a lot of concerns. We did have to see lockdown measures reimposed in some cities. It does appear that Germany has gotten its own coronavirus outbreaks in those areas under control. We've seen a steady decline in the number of new infections. So that concern has certainly eased. But for the broader landscape, this remains a huge, huge worry for the global economy and for everyone really in the world. We've seen, as you mentioned earlier, a huge increase in the number of deaths, and we've seen cases now surpassing 10 million. So in other countries, it doesn't seem to be as in control, and we are seeing a steady rollback in lockdown measures being eased. So that will have an impact on the global economy. The question now is just how quickly these countries like the United States that are seeing a second wave of infections can get that under control, because that will really determine how big of an economic impact that will have.
I guess the coming days will tell. Thank you, Chelsea. See you again tomorrow. Meanwhile, the London stock market made a cautious start to the new week. The FTSE 100 index of blue chip shares gained 7 points in early trade. But let's see if that is sustained at intraday with Juliana Olayinka on board. Good afternoon, Juliana. So we've seen the rise in the virus cases remain a major focus for the market. But how's the London market holding up at intraday?
Good afternoon, Bissy. It certainly does remain a key focus here in the UK. For the past couple of weeks, traders have been plotting against this second wave, wondering whether or not it will be hitting British shores. And it does seem to be that way. And this pertains to a town or city just in the north of England, which is Leicester. Public Health England have written to the city's mayor, urging them to go into lockdown. We do know that one of the last and final phases of lockdown in England is to be lifted on Saturday with the opening of the hospitality industry. But there are some officials that are asking Leicester not to do that, as there have been clusters of cases. I believe in one factory, over 160 people were diagnosed with COVID, and the numbers have increased over the past couple of weeks. So that is a concern, and that did hit the FTSE this morning. But there has been a little bit of an uptick in just before intraday, and that's because the European Commission's economic sentiment indicator did show an improvement for the UK economy. Last month it was at 61.7, now it's at 65.2. So that really does show investors that the UK economy is growing, albeit slowly. However, the European average on that indicator was 74.8, which does show that Britain is recovering much slower than its European counterparts. And to put that into some perspective, 100 is the average number that we were in this period last year. So slow, but a steady increase in the economy did cheer up traders. The all-share at intraday is up by 0.29%. The FTSE 100 is up by 0.40%, and the FTSE 250 is down by by 0.22%. In currencies, the pound is down against the US dollar by 0.13%, down against the euro by 0.75%, and also down against the Japanese yen by 0.15% at intraday.
On the data front, Juliana, the number of new mortgages approved in the UK have slumped again as the COVID-19 pandemic continues to grip the economy. Does this in any way mean that the UK property market has not recovered from the effective ban on moving house announced 3 months ago?
Well, absolutely, Bussy. That's what the data shows us. And I think it took economists by surprise because a Bloomberg poll that was conducted a couple of weeks ago suggested that mortgage approvals for last month would be 25,000. It was about the 9,000 figure, down from April's 15,000. And that is worrying some investors. Of course, we all know that one of the reasons why it's so low is because the government did urge home buyers and sellers and renters not to move houses during the 3-month lockdown period. And even though they were one of the first sectors to open up again, it has been a struggle. The concerns, I think, go a lot further than the data released by the Bank of England this afternoon, because, of course, what we know is that a lot of people, well, millions of people, I believe over 10 million individuals, are currently being paid by the furlough scheme, this government subsidy scheme. And when that completely tapers off at the end of October, there could be mass unemployment, and that mass unemployment means you won't have enough money to buy a home. The other concern is, of course, coming from the banks, and because of all the bad debt that they've had to put aside with all of these government schemes where they've been providing loans for businesses, many of them are not willing to take the risk on future buyers because who knows what's going to happen to the economy in the next couple of months. Are they going to pay it back? So that's a huge concern, and there are some suggestions that house prices in the UK could fall by minimum 5% this year, but up to 11%, which would be a historic figure.
All right, just before I let you go, Juliana, tell us if there are any other corporate news making the headlines worthy of note. It's a pretty slow corporate news day in the UK today, but a big story, again, never lets us down, and that's Brexit. For the first time this week, we are going to see face-to-face negotiations taking place in Brussels, where Downing Street representatives will be there trying to thrash out this deal. It's been a little bit prickly between both sides, but we're used to that. The Europeans have never been shy of commenting on where Britain is doing wrong, particularly in this Brexit scenario. But over the past couple of days, there have been some more positive sentiment coming out from both sides, and they do believe that they may indeed be able to find a deal. One of the issues that we now face is the fact that David Frost, who is Britain's chief negotiator, a very, very close ally of Prime Minister Boris Johnson, he will now be taken over from Sir Mark Sidwell, who was, up until yesterday, the most senior civil servant in the country. There's been a mass shake-up of the civil office in the UK, which has been led by Dominic Cummings, Prime Minister Boris Johnson's senior aide. Now, he is going to be stepping down from that post in September, and the government have announced that Sir David Frost, the chief negotiator for Britain and Brexit, is now going to take over his position as the national security officer, which means that they have, in effect, put a hard deadline on when these talks must finish. So even though the transition periods end at the end of December, we're expecting the talks to resume and a negotiation to be approved by the end of August, because that's when Sir David Frost is out of his job. And if not, then, of course, Britain will be leaving the EU in a hard exit, which nobody wants, but Britain are willing to do. We have our eyes on all these developing stories, and we'll see how they go in the coming days. Thank you, Juliana. Do you enjoy the rest of your day? Business Incorporated returns in just a moment with a focus on Africa's aviation sector in the face of the COVID-19 pandemic. Do stay with us. Welcome back. Now, it's no longer news that the COVID-19 pandemic has dealt a serious blow to the global aviation sector as countries shut down their airspaces to curb the spread of the disease. Although some countries are beginning to reopen, many airlines, particularly in Africa, are reeling from the huge losses incurred this period. The practice lead, Sub-Saharan Africa at Docker Frontier in London, William Artwell, joins us now to discuss the future of the aviation sector in Africa in the face of the COVID-19 pandemic. Good afternoon, William. Thanks for sharing some of your time with us. Well, the Ivorian government has just recently provided Air Cote d'Ivoire with a $24 million bailout to keep it afloat following its grounding due to the virus. How are other governments in the region seeking to sustain their flag carriers and support the aviation sector in general?
Well, important, of course, to acknowledge that a lot of these airlines have quite extensive fixed costs, salaries to pay, leasing agreements to honor, and so on. So, of course, they've been very seriously affected. Now, a lot of airlines, of course, have ceased operations, but others, have really been receiving a variety of kinds of support. The one is the government's actually using those airlines to make particular moves. So, Ugandan Airlines, for instance, only recently relaunched, has been used and chartered to repatriate Ugandans who were stranded abroad. Kenya Airways, probably the most high profile of the big bailout moves. So there, the airline is actually being in the process of being renationalized. Many, many years ago, it was privatized and has had, of course, ups and downs over the past several years. But the Kenyan authority is certainly looking at nationalization as the mechanism to really support the airline going forward.
One of the big questions left unanswered following the South African budget last week was around funding to relaunch SAA, the South African Airlines. What are your expectations for the South African flag carrier?
So this is, of course, a difficult one because SAA has been through the ringer of the past several years, hasn't been profitable since 2011, if I understand correctly, and has had many, many bailouts over the past couple of years. But now talks between the unions, creditors, the people managing the restructuring of the airline, they're really at a very difficult point right now, and the government is not keen to continue pouring money into this failing enterprise. So what we really expect is that eventually a new airline will come out of the process, probably a slimmed down offering. But of course, there are very difficult discussions still to have, particularly with the trade unions representing SAA's many thousands of employees. But of course, the omission of another bailout package for the airline in last week's budget speech is really telling that the government is not willing to continue stumping up money unless there's a real recovery and reconstitution plan put in place. So that's really what we're going to be watching out for.
Tell us, Will, what are your expectations for the airline industry in West Africa? Of course, we know that some carriers are resuming flights, but there is still much uncertainty about what the future will look like, both in terms of their ability to cover regional and international routes.
Yes, that's been a really key topic of conversation in the aviation industry. Sky relaunching flights, a gradual reopening in some markets with more cross-border travel allowed. Air Senegal also regaining some of its service. But of course, this is all on a much reduced timetable, much reduced schedule, and again, probably a more slimmed down offering than we've seen in the past. When it comes to the bigger questions about how the aviation sector in West Africa is going to perform going forward, of course, there's what policymakers are going to allow to happen in the region itself, so whether there's going to be allowed for cross-border travel, but then also, of course, where other international destinations are concerned. So travel to Europe, for instance, to the extent West African airlines are allowed and to what degree to resume flights between Europe and West Africa is going to be, a lot of that's going to be determined by how safe EU regulators believe travel between the two continents is. And here, of course, comes down to the question of COVID-19 risks. With quite limited testing capacity in many West African countries, I would expect EU authorities to be rather hesitant to allow aviation to ramp up to normal levels again. So I think this is going to take some time, and I wouldn't expect the aviation industry in the region to be back up to normal levels, even before the end of this year.
Practice lead Sub-Saharan Africa at Docker Frontier London, William Artwell. Thanks for speaking with us.
Pleasure.
The Pakistani Stock Exchange building in Karachi, Pakistan has been attacked by 4 gunmen who were later killed by security forces. The military says 2 other people were also killed during the attack in the building, which is in a high security zone that also houses the head offices of many private banks. There was no immediate claim of responsibility, but Pakistan has long been plagued by Islamist militant violence, although attacks have become less frequent in recent years. The Pakistan Stock Exchange said via Twitter that the situation is still unfolding and management, with the help of the security forces, are managing the security and controlling the situation. Meanwhile, trading on the Zimbabwe Stock Exchange has been suspended indefinitely. The Chief Executive Officer of the Stock Exchange, Justin Ibgoni, says the local exchange held discussions with the Treasury Department and the Securities and Exchange Commission of Zimbabwe and awaits the guidance from the regulators on the operational modalities going forward. The use of mobile phone-based payments has also been suspended till further notice. The government says mobile payment platforms were major drivers of a roaring foreign currency trade outside formal banking channels, with multiple listed stocks such as Old Mutual providing proxy exchange rates implied by their prices on foreign bourses such as the London Stock Exchange. Last week, Zimbabwe's central bank began weekly foreign currency auctions in a bid to draw scarce foreign currency into the formal market. The African Union Commission Chair, Musa Faki Mohammed, has confirmed that more than 90% of issues in the tripartite negotiations on the giant Nile Dam between Egypt, Ethiopia and Sudan have been resolved. In a statement over the weekend, the AU chief said a committee composed of representatives of the 3 countries, South Africa, and technical personnel from the African Union would work to resolve the outstanding legal and technical issues. The committee will issue a report on the progress of the negotiations in a week. The African Union has 2 weeks to help broker a deal to end a decade-long dispute over water supplies. And Britain's export credit agency, UK Export Finance, is set to back a $20 billion liquefied natural gas project in Mozambique. The UKEF listed the project led by French energy major Total as under consideration for financing last August, and sources say plans are on the way to fund the project with about $800 million. The projects have the potential to make Mozambique one of the world's least developed countries, a major LNG player. Total and other big oil companies are touting LNG as a transition fuel as it produces fewer emissions than crude oil. But as a signatory that is trying to position itself as a leader on climate issues, activists say Britain will be sending the wrong message by funding the project. Total has secured $15 billion in financing for the project, with a financing agreement expected to be signed next week. It aims to start producing gas in 2024. And that's where we end today's program. Thank you for watching. I am Bisi Adebayo.